Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's guys again take a look at the euro currency. So you can see that yesterday market has shown the plunge down that we have discussed, and we said that the probability for this move is a bit greater than to the upward continuation, especially when yesterday we have seen that market is starting to move below the weekly pivot point and start to accelerate to the downside. So market has shown really significant move down and has hit the area that we have discussed, the daily confidence support. But still, price hasn't quite reached these lows and hasn't quite washed out this area, because we have the bearish stop grabber, and stop grabber suggests the taking out of these lows. That hasn't happened yet, but this probably should happen in the nearest hours. That is the new pivot points for the January. So you can see that market has moved and tested, moved below the monthly pivot point, and now is approaching to the January pivot support 1 that stands around 135.75 area approximately. 135.77. Well, by looking this really significant move down, it doesn't exclude the possibility that market still will continue move lower, a bit lower. So if we take a look at the forward time frame chart, we see our ABCD price action. That's weekly pivot points here. Well, you can see that market in fact hasn't shown any respect of the minor target, the 618. That was our minimum expected target. Recall that we said that if market already has started to move down, it should hit at minimum the 618. And as this target stands slightly lower than these lows, it will simultaneously erase this potential butterfly and upward continuation. That has happened. But as you can see, market hasn't stopped here even by small minor bounce to the upside. It just has passed through it as it no exists. And by this fast candle, market has reached the next support cluster. That is ABCD target and weekly pivot support 1. Here we see shallow retracement. So when the market is forming such sort of the candles, really significant downward candles right before the reaching of the target, in most cases it suggests some further continuation down after some retracement up. Next target will stand as 1618 extension, is 135.50 area. It's very close to the monthly pivot support 1. It's 135.50. Pivot support stands at 135.77, just 20 pips difference. So that's why currently odds suggest, and I think that is really could be the case, that market after some bounce to the upside will show the continuation to this area. Now let's see how this bounce could happen on the hourly time frame chart. Well, we know that market now stands at the support, but at the same time we know that market has not quite hit the target of the daily bearish stop grabber that suggests the taking out of the lows that stand slightly lower than this area. Here, right at the support, we see bearish dynamic pressure, because you can see that trend has shifted bullish on the hourly time frame chart, but price action stands flat. It doesn't show any upward action. That is the bearish dynamic pressure, and as a rule this setup leads market to the taking out of lows that just has been formed. Simultaneously, it will lead to the hitting of the target of the bearish stop grabber on the daily time frame chart if market will accomplish this extension. So that could be the butterfly buy. And particularly this butterfly, when the lows will be hit, particularly this butterfly could put the foundation, could put the start for the possible retracement to the upside. As we said on the forward time frame chart, market has hit the support. So that's a major idea here. First, wait when the market will hit this target. We'll show some sort of the Russian range, something of that sort of these lows that we have here. In the forward time frame chart, you see them. It's right here on daily time frame chart. These lows, that's the target of this bearish stop grabber. Probably this will happen by some reversal pattern. Maybe this butterfly will shift to the reverse head and shoulders later. And after that, market could show the retracement up. The most suitable level for the retracement is this confluence resistance. Now it stands at 137.30 area. This combination of the two Fib levels, and take a look, natural support resistance. So that was the support, bounce up. Now it will be the resistance. These levels probably will drift slightly lower as market will create the new focus number. If market will create the new lows, that's why these levels will drift lower at the same distance. So maybe they will stand around 137.25 area, but the idea is the same. Because when the market hits the 100% extension, the major target, if even it shows this really significant plunge down, usually this leads to some deeper retracement. Usually it's 50% or 618 to the upside. That approximately coincides with this natural support resistance line around 137.30 area. That's why I suspect that particularly this level will be the destination of the possible retracement up, if it will happen, of course. So that's been said, our trading plan in the short-term perspective is wait for appearing some reversal pattern on the hourly time frame chart. I suspect that this will be some sort of the butterfly or reverse head and shoulders. Later we could wait for retracement up approximately the area around 137.25, 137.30 area. And after that, I suspect that market still has not bad chances to show the continuation right to the 1618 extension around 135.50 area. Mostly because this really fast acceleration right to the 100% extension target. When it happens, probability stands in favor of further continuation to the 1618, but maybe after some retracement. That's the setup that we have on the euro currency. So let's see what will happen.